tomorrow, so if we get any more on that, we'll bring it to you. Now though, let's go back to Mansion House. Our correspondent Emma Simpson is there. Emma.
Yes, those were two big, weighty speeches, weren't there? A lot in there to talk about. Mervyn King, first of all, in essence, what he was getting at, talking about regulation, was committing the Bank of England to tackling the big risks in banking when the Bank of England takes over regulation in the future. Now, to get a bit more reaction to that, we're joined by Chris Roebuck, again from the Cass Business School. Thanks for staying with us. First of all, Mervyn King, what did you take away from his speech tonight?
Well, what Mervyn King was saying was that when he looked back at what went right and what went wrong, effectively the light touch banking controls didn't actually work. If we go back to the removal of the capital buffer requirements, effectively the keeping the money for the rainy day in 1996, where the banks were left to their own decisions about what they did, that actually hasn't worked terribly well, which the financial crisis shows us. And what he's saying is now we need to move forward and we need to effectively balance two things. Balance the fact that banks need to be able to do business, so you can't have too tight regulation, but balance the fact that you need regulation to make sure they aren't taking too much risk.
On to George Osborne. There was a key theme there, wasn't there, what he called this British dilemma. Obviously a difficult balancing act to strike in all this.
Yes, what most people listening probably don't realise is that the vast majority of the banking business that is done in the city isn't anything to do with their retail banks, our accounts, small business in this country. It's all international banking. There are probably 25 global banks in London, of which only 4 are British. So it's those other banks who make the decision as to whether they stay in London or whether they leave London. And that's not driven by what the Chancellor says, that's driven by the global banking market. So what George Osborne has to balance is the need for the retail banking market to be able to provide us all with current accounts and keep our small businesses going, with the global banking market where he has to keep a group of stakeholders happy who actually aren't British organisations, don't have British shareholders, and actually don't have their headquarters in this country. And they're working on a different set of rules. So it's balancing those two that is really difficult, and that's what he has to achieve.
And very briefly, Chris, how do you think this is going to go down with the audience tonight? Do you think he got it right for them?
I'm sure he got it right for the audience. The question is, did he get it right for the country? You know, at a time when we have senior union representatives on the news tonight saying they will be calling their members out on strike because of the financial implications of cuts, the NHS looking at taking substantial cuts, people are going to be asking the questions, is the banking business making a sufficient contribution to the country? But the flip side of that, which we've looked at in terms of George Osborne, is that if we push the banking industry too much, it will just go somewhere else. And there are other countries who would be happy to take that business away from us.
As ever, Chris, the devil is in the detail, and of course we'll have to wait for that detail in the coming months.